What's up, guys? Morgan from Lynchpin here. I just wanted to talk a little bit today about this handy website that I found that compares some of the indicators for the stock market based on historical norms and kind of charts it all together and gives you an idea of kind of valuations on the stock market. So they released this update just a day or two ago, yesterday. And I really like to look at this for the long-term perspective. Now, keep in mind with like my 401k and some of that, I don't do a lot of changes most of the time. I mean, once a year, I'll kind of take a look at it and make some adjustments as needed, sometimes a little more often than that. But usually it's stay the course and it's performing relatively well. That being said, I manage a Roth IRA account and then a few other longer term accounts where I kind of factor this in, which I feel is important, kind of actively managing some of that. Now, I don't try to guess, and I lean much more bullish, optimistic. Market's going to go up. It continues to gain value. They've shown over time that the market's one of the best way to build wealth and compound past gains. That being said, we're kind of in some uncharted territory, if you will. I think we all can agree there. And it's just something I like to consider and something I wanted to point out for you guys. So if you're not familiar with what some of these specifics are, like for instance, the Q ratio and the PE10 ratio and some of that, I'm not going to break it down in detail in the video. I want to keep it relatively short because, again, I'm kind of highlighting the website. I'm not sponsored or, doing anything like that for them. I just find it to be helpful and useful. So advisorperspectives.com. I'll post a link to the article, and each month they release new numbers. So I just want to kind of look, all I want you to really assess from this is how high market valuations are currently, considering the potential risks associated with our economy currently. I'm no economist, I'm no expert in the field, but it's really interesting to me that the stock market has seen record gains, sets new records every week, basically. And I know there's a shift. I know that, the new economy post 2020 is different than before, but still there's some things that don't seem to really add up all that much, and we're setting new highs all over the place on these charts. So for me, I have actually used this to start hedging against the market some. Now, does that mean I'm totally hedging? No. It's just some extra insurance that I have decided to take, if you will, that in case we do get a crash, I can kind of capitalize both ways. And, some of that's through leaps options that don't expire for quite some time, because who knows? Nobody that I know of or would have access to knows when the market's going to crash, if the market's going to crash, how far it would crash. And I'm not saying the market's going to crash. But what I am saying is historically, you'll notice from these charts, it does pull back. And it pulls back in a significant way. Now, keep in mind, a lot of these are over years. So that's another thing to keep in mind, is that there may be certain stocks that are hardly affected, if affected at all. So it kind of depends on what does your portfolio look like, how much of your portfolio is in risk, how much diversification do you have. Again, there are factors to be considered. So I'm not saying that this is going to be a crash, but I'm also not scared to say, hey, dummy, corrections happen. I can't get over how many people say, the stock market just goes up. It doesn't. It does correct. And we've seen the longest bull run in history. So, I mean, it's just crazy, some of these valuations when assessed historically. And notice it gets higher each time. Yeah, maybe there is still another year of this or something, but it is something that has made me a little bit uncomfortable with the valuations being so high. It's gotten harder for me to find deals, if you will, on the market. undervalued stocks in sectors, I think some of the only sectors that I've kind of seen some undervaluations, in my opinion, are things like marijuana and stuff like that. Some of those stocks look attractive with their valuations currently. There are some that are overvalued still. But again, certain sectors are kind of left out. But at the same time, there's a lot of sectors at like all-time highs across the board and valuations just getting crazy. And so with that increased pricing that may or may not be transitory, again, lots of people are buying into what the Fed's saying, that, hey, this is only temporary, and yet yields are super, super low. It's one of those things where I like to keep the whole picture in mind. And it's something where I think you should consult a lot of different resources. Again, I'm no economist, I'm no expert in that field, but this is a site that I use and I discuss quite often with, like, for instance, my brother who does accounting. It's a good thing to keep in mind, especially when you're talking about your retirement. So check the site out. Let me know what you think, or if you have other resources that you think are nice, concatenated variations of this, that might be useful. But I really like these guys' charts and some of the information and data, the way they break it down. And, the fact that they're saying, these aren't short-term signals of market direction. We're just saying, here's where it is at. And obviously there are some things that can change. Again, the economy has changed. But I have to admit, I'm not totally comfortable with the fact that, we keep breaking new all-time highs, and yet unemployment's as high as it is. You got the housing market through the roof. Crypto set new highs not too long ago and have kind of pulled back from that. And so I'm just saying, do your due diligence across the board and save yourself some trouble. And hopefully this goes towards that. So thanks for stopping by, and have a great rest of your day.